Hello, everyone. Thanks for coming. John Lagman from Bloomberg. A real big honor to be part of Redefine Tomorrow 2023. Thanks for SCB 10X for inviting us. And thanks to all of you for dialing into a very great session. I actually did something, had a chat with Robert about a little over a year ago. So I know he's got a lot of cool stuff to say. Robert, do you want to introduce yourself real quick, and maybe for those who don't know, and I hope you should all know, what is Compound?
Sure. Thanks, John. So I'm Robert. I'm the founder of Compound Labs, which built the Compound protocol. Long before DeFi was a phrase that people uttered, Compound was an idea to use smart contracts running on the Ethereum blockchain to power a financial marketplace. And this marketplace enables people to use crypto assets as collateral to borrow other crypto assets. Most popularly, people use volatile crypto assets like Ether to borrow non-volatile assets like stablecoins such as USDT and Tether. And the platform has, over the last 5 years or so, grown from an idea into one of the most widely used DeFi applications. At its peak, Compound had about $20 billion of assets in TVL. And it's still one of the most widely used applications on Ethereum today. Since then, it's expanded to a couple different blockchains. And over the years, Compound Labs, which originally built the protocol, has focused on integrating Compound with institutions and traditional finance.
That's great. Now, one word I'm sure everyone heard quite a bit is the term collateral and stuff. So, you always hear about over collateralizing. How do you guys approach this very key issue in borrowing and lending of collateralization? And what kind of are the factors that you like to look at to determine, what ratio for your borrowers, especially in these times in the last year plus?
Yeah, that's a great question. So the reason that Compound is so efficient is that it's very easy to analyze an asset and its utility as collateral, because really the only thing you have to know is how liquid is it? Can it be liquidated if it needs to be? And what's the current price of the asset? This enables something as simple and elementary as a computer program that's like a couple hundred lines of code running on a blockchain to allow people to use something to borrow against. If you have to judge a person's character or their willingness to repay or their creditworthiness as an individual or a business, that's really not something you can fit into like a couple hundred lines of code. It's not something that can really run on a blockchain efficiently. It takes huge amounts of work and analysis and judgment to lend against credit, not against collateral. And so, collateral and crypto native assets are probably the most efficient way to do borrowing on a blockchain. Other people over time are going to solve this. I guarantee you in like 15 years, there's going to be incredibly robust systems where people can borrow on a blockchain, not using a specific crypto asset, but using, their history or reputation. But until then, what we've really focused on is the simplest approach, which is using an asset that's liquid and high market cap and easy to value as collateral. And, this has worked phenomenally over the last 5 years or so. Compound has never had significant bad debt arising from liquidations that haven't occurred because of this system. The way that risk is actually managed, what's really cool about this is it's actually evolved over time. And for the last couple of years, there's actually been a professional risk management organization in the community paid for by the protocol that does all of the risk management of the protocol itself. And this is a company called Gauntlet Networks. And they're actually doing all of the day-to-day risk management for the protocol. So it's not the team of developers that built Compound. It's actually a dedicated, unit within the community. And what they're doing on a daily and weekly and monthly basis is analyzing the volatility of the different assets that can be used as collateral, analyzing their liquidity, and coming up with the correct risk parameters so that the community can use different assets as collateral without jeopardizing the health of the protocol.
Capital, as you mentioned, and collateral, very key things. I know you have quite a few, say, partnerships with some CeFi platforms and whatnot. I mean, what's been going on, recently with the CeFi, different CeFi platforms, and let's call them crypto-friendly banks that have had issues They were sought to be very, prudent with their borrowing, lending, and or, and the capital managed quite well. I mean, given what's happened, I mean, do you see some kind of changes occurring on, say, with some of these CeFi platforms and with any of the crypto-friendly banks that have survived or might be sprouting up?
Yeah, well, the last year has been a massive transformation across the entire industry, and it's really resulting from, the collapse of Terra, 3AC, CeFi lenders, including BlockFi and Celsius, and then culminating really in the collapse of FTX. This has completely transformed the way everybody thinks about risk, thinks about the industry, and thinks about opportunities. I think in the short term, what it's really done is it's, for the most part, killed most CeFi interactions with crypto. And what it's done, in my opinion, is really reinforce the long-term ideals of what makes DeFi exciting and special. The ability to have a system that's transparent, autonomous, the rules are publicly known, and the rules are not able to be changed on the fly. All of these things make DeFi more palatable, but in the short term, over the last year, what we've seen happen is that everything regarding CeFi has taken a step back. A lot of the institutions that were, active users watched the collapse of all of these CeFi institutions and said, hey, this is a moment to pause, reflect, and think about where risk lies in the crypto economy. And what I think everyone has decided is that risk lies with centralization, with opacity. All of the things that collapsed really were centralized and opaque. And that was the key ingredients that led to, these collapses. And, in hindsight, it's obvious that none of the DeFi platforms suffered any collapse in the same way. And I think long-term, it's just going to cause people to rethink how they want to interact with the crypto economy. It's kind of like one step back, two steps forward. We're definitely in the one step back phase.
Okay. Yeah, one thing actually, a lot of this was going on, one of the key things people started talking about was proof of reserves and stuff, maybe for those, so basically verifying the digital asset collateralization that, people may really actually have. I mean, how do you see this changing things, for you or just the whole, crypto lending, environment in general?
Yeah, that's a really interesting point. So, historically, there's really been two ways that people have thought about crypto. One is not your keys, not your crypto. If you hold crypto, it's yours. If someone else holds it, it's not yours, and you can assume that it's going to get destroyed or vaporized or stolen in some way. And what we've seen is that there's an evolution of technology that doesn't make that the case. So historically, a lot of CeFi platforms weren't able to prove at all whether they were lying to you, solvent, or operating a compliant way. And this is one of the risks. We've seen so many different exchanges and CeFi platforms over the years collapse. A lot of time it was due to theft. Sometimes it was due to fraud. There's a whole different set of reasons. But at the end of the day, you had to take them at their word that they were, one, honest, two, holding all the assets that they should have been holding, and that they didn't do something stupid along the way or have something terrible happen to them. This goes all the way back to Mt. Gox. And so, there have been different solutions over the years. One thing that was popular, 5 years ago were, these exchange solvency days where people on Twitter got everyone in the world to try to withdraw from every exchange possible. And if the exchange couldn't process all the withdrawals, then they were insolvent or lying to you. And this has been slowly evolving to different approaches to prove the solvency of exchanges, to the point where eventually we're getting to a point where exchanges are going to be able to mathematically, prove that they hold a certain amount of crypto that they're supposed to have. So right now there's a very important trend, which is proof of reserves or proof of solvency, where exchanges are trying to demonstrate which addresses they control and demonstrating to their user base or the public at large how much crypto assets they hold. Now, that doesn't tell you the entire story, such as what are their liabilities, what's been pledged outwards, et cetera, et cetera, et cetera. But it's a really positive step in the right direction. And it's not a complete solution, but over time, CeFi platforms are trying to hold themselves to the same standards as DeFi platforms, where everything is radically transparent by default.
Robert, one thing I think the last, say, 12, maybe 15 months, I'm sure you heard it. There's always been a question, when is institutions going to really come in a big way? Whether DeFi, even just the general overall market and whatnot. For a compound, how have you seen your kind of relationship with institutions and basically evolve in the last, say, 12 months or so?
That's a great question. So, I'll be completely honest, with the collapse of all of the CeFi institutions, the relationship between Compound Labs and, businesses looking to enter the space has changed because there's a huge amount of additional skepticism of anything CeFi. And it's a learning opportunity for people to realize why DeFi is different than an exchange or a custodian or some other business model. And it's really powerful. One of the things that we tried at Compound Labs was building a CeFi middle ground product called Compound Treasury to bridge the gap between, a pure non-custodial DeFi protocol and institutions who were used to interacting with CeFi counterparties, to build a product that we could basically say, hey, there's a DeFi protocol on the bottom, and we're going to put a business on top of it that you can interact with to use this protocol. To simplify this, because most institutions are not yet set up to interact directly with smart contracts. And to be honest, it was going phenomenally up until the collapse of, all of the different CeFi platforms in 2022. And since then, it caused us at Compound Labs to reevaluate, what would be the right product for institutions to enter the space over the next couple of years, mostly because of the extreme distrust that arose after the collapse of, Terra, FTX, Celsius, BlockFi, FTX, all of these different institutions. And so, the relationship has changed. We were offering a service that was a DeFi CeFi hybrid. And, since then it's forced everyone to reevaluate, exactly what institutions are looking for and why. And I think that's really healthy in the long term for the ecosystem.
Yeah. So do you think that maybe it's something that might evolve to where even that CeFi layer becomes more, the way I kind of look at it, it's almost like it's the underlying smart contracts, more like kind of like an API from the treasury accounts into your protocol. Do you see that it might require working with, say, very large trusted institutions to market this more, let's say like an SCB or something like that? It become more, that's kind of the spirit of the whole area, right? I mean, collaboration, working with, people.
Absolutely. I think the eventual market structure that we're going to have, in 10 years, and I think everyone in the industry is working towards a similar end state, is that we're going to have DeFi protocols, which are, transparent. They run 24/7. They're autonomous. The rules are known. They're extremely robust. They're battle hard, and they just work 24/7. And then you're going to have institutions that people have relationships with, that they trust, that they understand, offering that service. And they're going to abstract away a lot of the complexity. They're going to simplify it. You're not going to have to necessarily manage, the interactions with a smart contract. You might not have to manage private keys. But under the hood, you can have one DeFi protocol that powers many, on-ramps. And those on-ramps can onboard thousands or hundreds of thousands or millions of different customers or users and abstract away all of the different nuances of interacting with the DeFi protocol. And, at a certain point, you're going to have protocols that are global, managing billions or trillions of dollars potentially in the end run, with lots of institutions or banks or brokerages or systems built on top that just onboard the entire world. It's how we get to 8 billion people using DeFi one day, whether or not they know how it works underneath, the UI that they love to use.
We've been talking, pretty much about the opportunities, but as you know, there's always that elephant in the room. Well, how do you see the regulatory landscape, staying the same or changing with crypto lending? It's kind of hard to say. I mean, obviously, everyone's been waiting to see, get more clues, and you sometimes get like hearing even in the same country, different organizations or departments saying totally different things.
That's a great question. So, globally, the landscape is improving pretty much constantly. So throughout, England and most of Europe, there's right now a huge tailwind towards embracing DeFi and embracing innovation. And actually, I'm like really optimistic about some of the changes that are happening to make crypto more accepted and part of, the broader economic framework. In the US, it's going in the opposite direction, where right now the administration is actually, for whatever reason, I think it's an incredibly short-sighted decision, but they're incredibly hostile to all things crypto. This is, a deep miscalculation on the part of the administration, but it's the reality. I think, the legislative body in the US is not as hostile, but for whatever reason, especially in the aftermath of FTX, there's just like an outright hostility to everything crypto, not appreciating the incredible opportunity that crypto presents, the opportunity to transform pretty much all existing financial infrastructure to make it faster, cheaper, more transparent, more autonomous, safer, and fairer. And so, I'm very bearish right now on a lot of the actions happening in the US, but I'm extremely bullish about a lot of the actions happening in England and Europe.
How about like closer to, I guess, for myself, since I'm out here in Asia, any other views on what's going on with, let's say, Singapore or Hong Kong? Or
yeah, it's more patchwork, and what's interesting is like there's a pendulum where like, a lot of those local governments are actually extremely supportive and coming up with their own like specifically tailored local regimes to enable this. I would say Asia, without a doubt, has been much more forward thinking than the US has been.
Nice. Now, I also wanted to make sure we had time to talk about some other things I think are really cool that you're doing. We probably have a lot of people that are, thinking either at the very startup stage or looking to launch things. Now you have compound grants. I was curious, and maybe you could give a little background about it. And obviously something that I'm sure those who are listening right now are wondering, what kind of grants do you look at? How do you evaluate things? Kind of what's your kind of criteria when you give out grants?
Yeah, well, thank you for asking that. So Compound Grants is a program created by the community to give grants to individuals and teams and developers along many different verticals of things that the Compound protocol is looking for, from improving the security of Compound to coming up with new interfaces, to coming up with ways to increase the education or growth or reach of the Compound protocol. I'm personally not actually involved with Compound Grants, and this is one of the coolest things about being a part of a decentralized community is that you have these initiatives which are incredibly important, which can grow on their own. And so I'm actually not a part of the Compound Grants process whatsoever, but I've been really excited to see this type of thing come out of people's minds and into reality. And so I think there's a couple $1 million that are given out each year to different participants. And so if you're interested, look up the Compound Grants program. It's a way to get involved and get paid essentially to contribute to a decentralized community. And I actually think it's emblematic of the way that, decentralized communities can function, which is you can have lots of really interesting, things crop up that are created by the community itself. And so I think Compound Grants is amazing. Definitely check it out. There's other DeFi protocols that have similar programs, everything ranging from Uniswap to MakerDAO, et cetera. And Compound has a really strong example of one. And so if you're interested, absolutely take a look at it.
Oh, that's great. Anything recently that's come out that's from the grant program that, oops, sorry about that, that you can mention real quick? Or
yeah, so there's been a couple things that are really exciting, in my mind. A lot of it comes down to tooling and interfaces and analytical systems. This is the second generation of the Compound Grants program. There was actually one before this. And so it's really exciting to see this renewed program, which just got started a couple months ago. I personally expected it in like 3 to 6 months. We'll see a lot of the outcome of this last wave of grants.
That's great. So, I'm cognizant we have a few more minutes. Two things. First, I think for our viewers, what are your kind of team's priorities in the, let's say, next, for the rest of the year? and anything particular you're excited about, and then if you have any kind of like maybe closing message to your community, which I'm sure, I hope that many of them are on this virtual call. Yeah,
it's a great question. So the number one thing that Compound Labs is focused on at this point is trying to find the middle ground between traditional finance and a DeFi protocol. We've talked about this a little bit during this call, but this is a never-ending quest, and it's going to be the number one focus, in my mind, for the next couple of years, probably the next 10 years, which is trying to find a way to combine a DeFi protocol, which can scale to, and has scaled from billions of dollars to hopefully one day trillions of dollars, with the broader financial ecosystem. There have been multiple experiments over time. The last one was Compound Treasury, which was this business built on top of the protocol. Compound Labs is going to continue to experiment and try different things to integrate, the two different systems, DeFi and CeFi. And I'm really excited about, the different things that are going to happen over the next couple of years. But that's sort of, when I look at Compound Labs, what the goal is. They're going to continue to build, bridges, so to speak. And what that looks like and what products are released is going to change. And you're going to have to wait and see. I'm going to have to wait and see. But I'm really excited by some of the things that, are going to happen there. Just think of it as bridges between TradFi and DeFi. And when I look at the space, the other role I have is I'm my almost full-time job at this point is as an investor at Robot Ventures, which is investing in the earliest stage DeFi projects. And the things that I would encourage everyone listening, to think about are, what can you build that doesn't exist yet? DeFi, for better or for worse, is only a couple of years old. There have been a couple runaway successes, which is, decentralized exchanges, decentralized borrowing platforms. But there's a huge number of things that just haven't been tried yet. There's a lot of ideas from traditional finance that haven't been migrated into a DeFi native ecosystem yet. There's a lot of things like, as we've talked about earlier on the call, uncollateralized borrowing, which is still at almost like, a point of, non-traction. And so, I would encourage everyone who's thinking about working in crypto or listening to this call to think about the things that don't exist in DeFi yet, not to create the 7,000th AMM, but to say, like, what doesn't exist that can exist or shouldn't exist. There's so much in broader finance that can become decentralized finance, where there's only been like one or two very early experiments, ranging from insurance to risk management to, voting to, information to how to like decentralized organizations run themselves. That's ripe for innovation and opportunity. And I think DeFi has so much more that's going to be built over the next couple of years. And I'm just really excited to watch everything that people are trying to build.
Yeah, well, oh, that's great. As always, it's been a pleasure. Unfortunately, it looks like I think they have the next panel coming up, and thanks again, everyone who dialed in, and please stay for the next panel. And Robert, as always, good to see you, and yeah, have a good evening out there.
Yeah, great talk. Appreciate it.